Hey, good evening, everyone. Welcome to earningsbeats.com sneak preview, Q4 earnings. Today's January 21st, 2020. Got John Hopkins here, president of earningsbeats.com. Oh, I know we have a lot of new people with us tonight, new members. Really want to appreciate, thank you for taking the time to sign up, giving us a try. We've also got some very seasoned members who've been with us for a long time. Appreciate that as well. This is a kind of an interesting event tonight. It's really all about giving you a preview of another webinar that we're going to be conducting next Monday, which is January 27th. By that time, a lot of companies will have reported their earnings, and there'll still be a bunch of companies to report. And during that particular event, we'll be focusing on those companies that beat earnings or that look like they might have a good shot at beating or missing earnings. Tonight, Tom Bowley is going to talk about some of his methodology when he starts delving in and trying to find stocks that are high reward to risk trading candidates. Then he's going to cover 15 stocks that he thinks could either beat or miss earnings expectations, and I'm sure a number of those we'll be able to look at when we get together next week. I'm going to come in just a little bit. I'll let Tom take a break, get a drink of water before he gets into the 15 stocks. I've got a couple things to talk to you about. I'm going to wait till then, though. So let me go ahead and see if Mr. Bowley's ready to roll here. And if he is, we'll get this thing started.
I am just about ready. Good evening, everybody. Good afternoon, wherever you are. Maybe good morning. I don't know. But yeah, I think I'm ready to go.
All right, it's all yours, my friend.
All right. Well, there's a couple things I wanted to go over tonight. So first of all, thanks to everybody for taking time out of their busy schedules. I know it's not easy to, come in here for what probably will be about an hour, I'm guessing. Got a lot of charts we're going to go over. Got some things I want to show you. But really what I want to get into is I want to talk a little bit about what we saw, 3 months ago, just to give you a little background on how, I approach the market. And, I think when you're looking at earnings reports, I'm a short-term trader. My strategy really isn't to hold into earnings reports. It's just so volatile. And, you can see companies that have been performing well into earnings and all of a sudden they just have the carpet pulled out from under them. Or they can be stocks, companies that have been going down for a little while and have a complete character change. We get a nice gap up and could begin a nice uptrend. But heading into the earnings report, you really don't know. It seems like it is literally a coin toss. Well, I would argue that maybe we can get the odds a little bit more in our favor than just a coin toss. So for those of you who do like to hold into earnings, I would suggest that you really pay attention to relative strength heading into the earnings report and how the stock has been trading into the earnings, not just the last day or the last couple of days, but really how it's been trading throughout the quarter. And the whole mindset there, and the reason that I think that's important is you have to recognize the way Wall Street works. You've got companies out there, Wall Street goes out, they meet with their management teams throughout the quarter. After the end of the quarter and up to the earnings report coming out, there's a quiet period, so they can't talk to them. But during the quarter, they can, and they do. And so you've got a lot of folks from these, the Goldman Sachs of the world that go out, meet company management, find out what's going on with their business, how are they doing versus their competition, what are their margins looking like, and, what does the future hold for the company? And then they use that information, they come back and they decide to buy and sell. Now, we don't get information from the Goldman Sachs, folks, but we do see what's going on the charts. And that's why I think it's really important to pay attention to how stocks are trading. So first thing I want to do is let me go ahead and bring up a group of charts. Let me see where I've got it. Here we go. I want to go ahead and just share with you a list of stocks that back on in the last quarter, I had talked about as we were heading into earnings. And I talked about some of these companies, and it was just, they were all coming up, pretty soon. The ones I give you tonight, had to make some changes because the stocks that are reporting this week, I just really wasn't overly thrilled with, to be honest. I mean, I'm looking at a lot of them. Most of them, many of them are in the banking area. A lot of them are underperforming the bank index. And honestly, I just didn't see a whole lot of great looking charts this week. So I'm thinking earnings this week are going to be, may not be great. And maybe that keeps the market kind of a lid on the market. But I think next week things could change. And that's kind of what I want to focus on, is start looking ahead to some of the earnings reports and taking a look at the ones that probably, or at least look like they could beat estimates as we go forward. Doesn't always mean that the stock goes higher. That's the other thing. I mean, sometimes you can predict beautifully. A company comes out, they beat top line, they beat bottom line, they raise guidance, and you're holding the stock, you're excited, and the next day it's down 7%. And you're like, what the heck happened? But a lot of times the stock is already built in, buy on rumor, sell on news kind of a thing. So anyhow, there's a lot of things to consider going into the earnings report. There's nothing that guarantees the reports that come in, and then also how the market reacts to those reports. So we want to, be a little careful. I will say, before we even get going here, that Netflix has reported, and their subscriber growth topped expectations, but their guidance disappointed. What I am showing after hours is basically flat. I don't know if that's the best. I mean, I'm getting it, off of one of the services. I'm not sure if this is real time. I think it is, but just seems odd after earnings for the stock to be down 35 cents after hours. But anyhow, just wanted to kind of give you a heads up, because I know Netflix is probably one of the bigger reports this week. But let's take a look at some of these companies. First thing I want to do, though, is go back to the last quarter and just pull up this chart, these 15 charts in summary format. So 15 companies, and then I'm just going to go back the last 90 days. Now, these were all companies that I provided to members before the earnings came out. These were companies that just looked like they were going to report good numbers. And if you look back from 90 days ago, which was roughly when we did this webinar in the last quarter, you can see how these companies performed since then. Now, some of them may have gapped up and then they pulled back. Some might have gapped down. Some may have beaten earnings estimates, revenue estimates. Others may have missed. But this is the performance from the last 90 days of this basket of 15 stocks. And when you look at it, that's pretty good. I mean, I don't know, from middle of October, I think the S&P 500 was breaking out that 3,025 level. So the S&P is up less than 10%, or around 10%. And so that you can see, of these 15 stocks, 10 of them outperformed the S&P 500. Maybe KLA did. I'm not sure, but it's pretty close. And then 4 underperformed. 2 of them pretty poorly. But look at all these other stocks that have really done well over the last 90 days. Of course, Apple, one of them. And this was not designed to be 15 stocks that were well diversified, anything like that. In fact, if I pull these up, I'll pull up the sector, the industry. You can see 5 of these companies were semiconductors. So I was looking for, okay, what areas of the market have been really hot? What's Wall Street expecting? And semiconductors were beginning to roll into the fourth quarter last quarter at the end of 2019. And they had a nice run. And so it was that's one of the reasons why there were 5 semis on here, because money was rotating into those groups, or into that group, those stocks. So when I look back, for instance, at Ultra Clean, and I'm going to pull this up, or I have pulled it up here on a relative chart. Here was the earnings report that came out at the end of October. But you can see the stock had already broken out. Look at the move here back in September. Look at the volume coming in. Already looked like there was accumulation to me, maybe a little cup, little handle, breakout. And on a relative basis, not only were semis breaking out above recent highs, but you can see that UCTT relative to semiconductors was also breaking out. So we had a strengthening group, and this was one of the stronger stocks within the group. So it's simply saying that Wall Street's expecting a big report, so maybe we should be expecting a big report. And UCTT did come through. The stock was at 18. 4 days after earnings, it was up to 23. So we're talking about almost 30% move in a week after earnings. It's consolidated. Now it's breaking out again, moving to the upside. UCTT looks pretty good. But the point here was Wall Street was telling us this is one that if we were going to hold into earnings, this probably wasn't a bad one to take a shot with, because Wall Street was expecting good numbers and they delivered. We could do others. This one did not pan out, but let's take a look at what was going on heading into October. Here, the overall group, telecom equipment, was not performing well, but look at Viavi. I don't know if I probably butchered the name, but Viavi on a relative basis was moving up very quickly. So of the money going into telecom equipment, VIAV was getting more than its fair share. And you can see some of these days were on some pretty good volume, looked like it was being accumulated. And by the way, after earnings, the stock did move up. It did come up. I think they beat on top and bottom line, had a really nice report, went up, and then went through a period of consolidation. It's probably ready to make another breakout, to be honest. But this is a stock that over the last 3 months has not performed very well, and did underperform the S&P 500, even though the numbers looked pretty good. Part of it, I think, was that the telecom equipment was just kind of in the tank back then. But this was a relatively strong performer, good volume trends, and it did come through with a nice report and a gap higher. Maybe take a look at one other stock on here. How about, well, we know what Apple did. How about Amcor? It's another semiconductor. But look at this stock. And here was a big move on volume. Look at the volume here, five days in a row. Nice push, breaking out with increasing volume. And then heading into the earnings report, look at the volume coming in. Obviously, there was something being anticipated here. Semis going up. Before, this was the reaction to the earnings, but even before the earnings came out, this was a stock that had moved up to about a 7 or 8 month relative high. So you got a stock, again, that's improving. Wall Street's expecting a big report. We got a huge report. Since then, you can see we've actually pulled back quite a bit. Now we're starting to trend up again. This is a stock probably needs to grow into its market cap a little bit. But AMKR, nice reaction to that anticipated earnings. So I just wanted to give you a backdrop here of kind of the things that I look for. I want to see companies that are showing some nice relative strength, and it would be great if they're in an industry group that is showing nice relative strength. So how do we find that? Well, at Earnings Beats, one of the things we have is our relative strength chart list for our industry groups. And so if we go in here, I can view all, and then I can do it in summary form. So this is just showing me relative strength. So for instance, today, autos were the #1 group relative to the S&P 500, clearly easily outperforming the S&P today. But you can then change this period and go back 1 month. And when you look back 1 month, look, we got computer hardware, that's Apple, and we got autos. So over the last month, look at the relative outperformance. Those have been the 2 best groups. A group I've been writing a ton about recently, internet stocks. They are all of a sudden red hot. And we've got internet stocks now in that 4th place in terms of 1 month performance versus the S&P 500. And then you can look at the 3-month performance. And you can see autos, computer hardware, still right there among the leaders. Some of the others, software, believe it or not, the last 3 months, software has really come back. And we're seeing a lot of strength there. Now, when I look at this and I see the 3-month leaders and I look at the 1-month leaders, I have a feeling that Wall Street is putting their money into these groups for a reason. They're going out talking to a lot of companies within these groups, and they like what they see, and they're coming out, they're buying, and that's why on a relative basis, these areas are performing well. So part of, my strategy is constantly looking to see what areas of the market are going higher. As a short-term trader, that's kind of important. You want to know what is working now, because if you're a momentum trader, you really don't want to be flipping this upside down and saying, well, let me go jump into aluminum. It's underperformed by 21% over the last 3 months or over the last month. Now's the time to jump in. As a short-term momentum trader, I want nothing to do with aluminum. I want nothing to do with coal, steel, many of the energy areas, real estate, materials, consumer staples, that's defensive. And just look at what's littering the bottom of this performance chart over the last month. Defensive areas, energy, materials, so you got your commodities. The market's been on fire and aggressive areas are leading. So these are areas I have no interest in. And I doubt that there'll be too many individual stocks that I talk about that come out of these groups, because Wall Street, they're not performing well. So if I'm looking for relative strength, I'm not going to find too many in these areas. So this is the second thing I do. So I actually went through and I looked at the top 25 industry groups relative to the S&P 500 for the last month and also for the last 3 months. And I'm going to pull up for you the 12 industry groups that rank in the top 25 of both those time periods. So this will give you a little bit of an indication of what is working and what has been working heading into the earnings. So I suspect that we are going to see these companies performing pretty well. Now, as you look, I've got them numbered in order, basically by the 1 month outperformance, although there's a little bit out of order. This was done a couple of days ago, so we probably had a little bit of movement here on some of these groups. But I just want to go through and just show you, before we even get into individual stocks, some of the areas of the market that I think we're going to see some blowout numbers. Again, that doesn't mean we're going to keep going higher. It could be a lot of it's already priced in. When I look at computer hardware and I look at Apple, you couldn't possibly convince me that Apple is not going to have a great report. But has all that good news already been built in? That's going to be the question that has to be answered when the numbers come out. But computer hardware has been on fire, and a lot of this is because of Apple. Automobiles. All of a sudden, and I'm not a big long-term fan of autos, and I'm not going to be talking about Ford and GM tonight, but Tesla, yeah, we're going to probably be looking at that chart. I think Tesla is moving up for a reason. They report next week, and I have a feeling we're going to see a big, big number coming out of Tesla. But autos, look at the performance now. All of a sudden here, this is the relative performance. This is the absolute performance. So a huge move here over the last quarter, and now all of a sudden challenging the high back in January of 2018. I think we're going to go through relative strength. I think this is the best that it's looked at any point over these last 3 years that are on this chart. This is the relative chart, mostly downtrending. I mean, maybe right in here we were getting, starting to look good, but notice the 20 never crossed above the 50. This is the 20-week relative EMA. So it's the EMA of automobiles relative to the S&P 500. So when you get the PPO moving into positive territory, it's telling you you've got an area of the market that's really strong on a relative basis. And so that's what this is telling me here with the automobiles. But again, not all autos are created equal. There are going to be some that I think look a lot better than others. Internet. I have been so high on the internet stocks here of late. Love this move up off the 20. The 20 has now been above the 50-week since back in April. We did have a little bit of a hiccup here over the summer months, but I think we are back on track. And not only that, this was a huge breakout on an absolute basis. From 1850 down to about 1350, that's 500 points. Tack that on to the breakout, and I think we're looking at probably at least another 200 to 300 points on the internet index before this rally is even close to being complete. So I like internet stocks. I think that this group looks good. Look at that relative PPO moving higher. This is going to be an area I think is going to have some good earnings reports coming out. Specialty finance. We went through a little bit of the doldrums there in the third quarter, August and September, but this group has really come back strong. We've broken out on an absolute basis, and we're about to do it on a relative basis. That relative PPO starting to turn back up again. So Wall Street liking that group. Some of these have done well over the last month or 3 months, but still are a little iffy. I'm a little skeptical, and this is one of them, transportation services. Huge drop. So I don't know how much of this is just a relative dead cat bounce, but it has moved back up above the 20, the 20s above the 50. Relative PPO is at least positive. There are some names in this group that could perform well. We'll talk about one, maybe a couple of them just a little bit later. Defense stocks, really hot back in the summer and then pulled back heading into throughout most of the fourth quarter, but in December started to regain its strength. Notice the 20 is still above the 50. And really what we did is we came down to the center line, and now we're starting to turn back up again. We've seen this before. We saw this back at the end of 2017, early 2018, back to that relative 50-week moving average, back to that PPO center line, and then we took off. And so that's kind of what this is looking like to me. So I still think defense stocks look pretty good here. Consumer finance, been sideways consolidating, maybe letting a little bit of air out of the bubble last 4 months, but now we're starting to pick back up again. Another one down near that center line support. Now all of a sudden, we're beginning to see that relative strength pick back up again. Medical supplies, this is in that iffy skeptical category. We've been downtrending on a relative basis for a long time. The 20 still below the 50, the PPO still weak, but it came up on my scan because it's done well over the last month and it's done well over the last 3 months. Actually, this would be 3 months right here. So it's beginning to show a little bit of strength, but I still see a downtrend. So medical supplies is maybe one that, it's in that top 12 I wanted to show you, but I could maybe be a little skeptical or a lot skeptical there. Software, I'm not skeptical at all. We went through a period over the summer, struggled a little bit August and September, but man, we have come roaring back. And I tell you, the one thing that I think a lot of people don't understand about the stock market and why everyone's scratching their head, why is the stock market going up? Why does it keep going up? Why isn't it pulling back? Well, when you have moderate economic growth and you have companies that are able to grow their earnings rapidly, and those future earnings that are being projected are being discounted back using historically low or very close to historically low interest rates, that creates an earning stream that's very, very attractive and valuable. And so I think a lot of what's going on here is the market now. I had said the thing that held the market back in 2019 was the Fed. The Fed was just gumming up the works. They had it all backwards. They had it all wrong. Nobody could convince me otherwise. The stock market, the bond market, everything at the end of 2018 was telling the Fed to stop raising rates. And yet they came out in December of 2018 and said, not only are we going to raise, we're going to raise 2 more times in 2019. And I wrote at the time, I said, they are not going to raise rates in 2019. I just didn't see it unless they were absolutely ignoring everything that the market was telling them. And sure enough, they came around and they stopped raising rates. And then they finally began focusing on what's important, which is the fact that we've got growth with almost no inflation, low inflation. As long as you grow and you don't have signs of inflation, you don't have to raise rates. This is nirvana for stocks. You've got growth, you've got low interest rates, and a Fed that's just sitting on their hands now. I mean, this is perfect. So anyway, I could keep ranting, but I'm not going to. Software, this is one of the groups that the earnings are really increasing and accelerating. And that is why for the last 3 years, you're seeing this. It's just been a group that keeps building profits. Microsoft is a cash machine. And Microsoft isn't the only one. There's a lot of great software companies out there. And the thing is, the small ones are really tacking on. I mean, we've had a great year in Microsoft, but man, there have been some other software stocks that have been absolutely monsters. And I think that's going to continue. I think we're going to see some big reports. And when they beat their earnings estimates and they beat their revenue estimates, and if they happen to be raising guidance, I think some of these companies are still going to go a lot higher. Financial administration stocks, Another one that went through a period of consolidation, nice uptrend for a long time. PPO went a little bit below the center line. I think it's just starting to show strength again here. So financial administration looks pretty good. Publishers, nice breakout here. Quadruple top, relative breakout. PPO, which was down, getting close to zero, starting to turn back up again. I think publishers look pretty good here. And then the last one, again, this one you could be a little skeptical because I am investment services. I think a lot of this, like this group, banks and so forth, really going to depend on what the 10-year treasury yield does. What do interest rates do? If we do see them start to pick back up again in 2020, then I think you're going to be looking at leadership from investment services, banks, asset managers, and so forth. If not, then they'll probably just kind of go along for the ride, which is what investment services have been doing. But again, if you look back 1 month, we got a nice rally. And if you go back 3 months, which would be the middle of October, you can see we've got a nice rally. So that's why it's on the list, but we are still in this downtrend. The 20 has moved above the 50 and the relative price actions moved above the 20, which is nice. PPO has just been flat right here on the center line though. I'd like to see a breakout above all of these tops right here. That would really get me thinking much more bullishly with investment services. So anyhow, that is going to kind of lead me up to some individual stocks. I know John wanted to come in for a couple of minutes. I will say that I'm looking at Netflix, which is now up $3.80 after hours, $341.90. So it is up now more than 1%. We'll keep an eye on that for you. I'm going to take just a couple minute break. So John, go ahead and take it away.
Okay, Tom. Hey, great job. You know, even though I work side by side with Tom, I still learn something every day when he makes a presentation. And the next part of the presentation is going to really be interesting because we're going to, going to be getting into specific individual stocks. Just before we do that, I wanted to just go over one thing real quickly. This is something we do every time we have an event. Let me go ahead and share my screen here. Okay. This is our earnings beats webinar special. You took the time to come in today. I want to give you some kind of a special deal. This is particularly for our monthly members, people who are on trial. And if you sign up by midnight on January 23rd, you're going to get the best deal. You can see the details right down here. A couple of things I want to point out. Number one, you get access to all of our webinars over the next year. Remember, this webinar we're doing tonight and the one we'll do next Monday, the actual Q4 earnings webinar, there's 8 of those during the year. So there's 2 for each quarter. That's 8 events right there. In addition to that, this is always a big one. The top 10 picks webinar, that's going to be in the 19th of February. And this is where Tom reveals, it's actually 40 stocks now, including the value portfolio. So that's something you really want to get into. But one of the things I really want to point out is a relative strength industry group chart list. Thomas, you can tell, very big on relative strength. He created a list of all 104 industries. It's updated on a real-time basis. And if you're an annual member, you get access to that entire list. So you can look at every single day. You can look at the company, at the industries that are the strongest or weakest, and then match them up along with our strong earnings chart list. We've got 280 some stocks on it now, and that gets updated throughout the year. Very big feature. So anyways, you can just go right to the website where it says webinar special. Click on that link and take advantage of this deal. You save a lot of money over the course of a year. So if you think you're going to be with us, you like our philosophy, like the way Tom operates, a year's a good amount of time. You get 4 quarters in and you'll save a lot of money. Anyways, I want to just go over that. And if Tom's available, I'm going to turn it right back over to him.
Okay, sounds good. Yeah, I'm going to jump right back in. Okay, so what I want to do is, like I said, I didn't really see a lot of earnings coming up the balance of this week that look good. In fact, let me just show you Netflix, since Netflix reported, and the stock is up about $3 after hours right now. But if you look at the internet stocks, here's internet going absolutely crazy. And then you got a stock like Netflix relative to the group and relative to the S&P 500. It has not been one of the leaders of the market or of its, among its peers. And so heading into the earnings report, they apparently they didn't, their guidance wasn't great, but that's not shocking to me looking at what I see here on the charts. I think we can make some realistic assumptions when we look at charts and we see that Netflix isn't one of the best stocks in the internet space. Then probably Wall Street's been out there. They've talked to the management, and they're not that impressed. And so as a result, their money is not going into Netflix, at least not on a relative basis, more than other areas or other stocks within the internet space. So, we want to take all of that kind of thing into account when we're looking and deciding, if I was going to hold a stock into earnings, and I have done it from time to time. It doesn't happen very often, but I wouldn't do it without looking at the relative strength first. And sometimes the relative strength will come down when a stock is simply consolidating. And so I like to go back and see when it was at its high, before it started consolidating, what did it look like relative to its peers in the S&P 500? And if it was at a 52-week high, then I tend to think the sideways consolidation pattern that's taking place will ultimately break out to the upside. All right, so let's take a look. I'm going to go through and point out 15 stocks. I did it last quarter. I'm going to do it this quarter. The only difference is these 15 stocks are probably going to be reporting at various times over the next 3 or 4 weeks. So they're not going to be companies that are necessarily reporting the next 2 days like I did last month. I just don't see enough of them. I might be able to do that next week, Monday's webinar, and I'm going to go through some of those companies as well that will be reporting next week. That could look pretty interesting, but I don't want to necessarily look at those companies as my top 15 because I'm not sure what I would look at next week. So other than we will also be looking next week at companies that have already reported an earnings season and start taking a look at some of the companies that'll be on our strong earnings chart list and different support levels and areas that might be appealing to get in, that sort of thing. But let's go ahead and start this off. I'm going to go first with Synaptics. This is the 15 stocks that I think are going to have big numbers come earnings time. This is part of the computer hardware group. So we've already talked about computer hardware. It's been off the charts. Apple has been tremendous, and it's actually hard to find other computer hardware stocks that are outperforming the index because Apple is going up so fast. So Apple's taking the entire index with it, and you got to find something that's outperforming Apple, which isn't easy to do. Synaptics has. Synaptics has actually been outperforming Apple. Look at the volume coming in back in November, another breakout in December, big volume, and now just recently. We could get a pullback here. The stock reports on February 7th. So got a couple weeks, maybe 2.5 weeks before earnings come out. But Synaptics, SYNA, definitely looks like a stock. You can see it on a relative basis. This is kind of what I was talking about. We set this high here, and you can see the new relative high. We set this high over here, new relative high. See how when we consolidate sideways, see how the relative strength starts to deteriorate? That doesn't mean that the company's not good all of a sudden. It just made a huge run. We got to give it a little bit of break, a little leeway. Look at the volume coming out of the stock as it consolidates. Then the volume comes in and breaks out. Look at the relative strength take off again. So I think this is kind of a little bit of sideways consolidation. I think we're going to eventually get another breakout here on Synaptics, and I think their earnings are going to be strong. All right, talked about autos. Can't possibly go without talking about Tesla. Now, I know a lot of people look at this chart and say, my gosh, 3 weeks ago it was 250. It's 550. I can't buy it here. Well, I don't think you're going to be able to buy it back at 250. Those days are over. Obviously, there's a lot of good news out there with Tesla. Wall Street's been out. They like what they see going on, and Tesla has a history. If you look at the long-term chart on Tesla, this stock ran from, I don't know, probably $30 to $200 in less than 3 quarters, maybe 2 quarters. This is a stock that can really explode, and it has been going sideways for 5 years. It is just making a breakout. I wouldn't be shocked if a year from now Tesla's $1,000 stock. And I'm not just saying that because I'm going to, trying to be crazy. I just think this is a company that once the earnings begin to move, and the, whatever it is that Wall Street likes about it, as that momentum continues to build, this is a company that can really move. And I think going back to this chart, you probably looked at it when it was at 350 and said, well, I want to get it back at 300 or 250, and it never went back there. And the next thing you know, it's at 400. And you say, well, as soon as it gets back to 350, never went back there. Then it goes to 500. I think you're getting my point. Look at the volume coming in on Tesla. There's a lot of accumulation taking place here. Yes, Tesla's going to pull back and consolidate at some point, but I don't know if it's going to be now or if it's going to be after the stock hits 1,000. And that's why waiting sometimes to get in on these stocks. Now, I don't like to chase. You're talking to somebody who really does not like to chase stocks. But I also recognize massive volume and a move higher. And that tells me and translates into what is likely to be a big report coming up. CDLX. This one is actually in one of our portfolios. I think it's in our aggressive portfolio right now. And it has been a monster. It's in the internet area. Of course, we love internet stocks. So you got the big move up in November. Just recently, another big push to the upside. Now, I was looking, and the company normally reports about the second week of the second month of the calendar quarter. So normally, I would be expecting February 10th for Cardlytics to report. So I didn't have the exact day, so make sure you check that out. But this is one that I think, based on the way it's trading and has been trading, it's a small company, but their earnings are growing rapidly. And this is what I mean. In a low interest rate environment, when you've got a company that's growing this rapidly, the valuation of those future earnings discounted back using a historically low rate is extremely high. And that's why these companies are exploding to the upside. CDLX looks good. Another internet stock, this is in our model portfolio, starting to move here just these last couple of days. I think it's been consolidating. This is another perfect example of a stock. Look at where its relative strength was versus the internet when it set its high. Now it's been consolidating for the past couple of months, 6, 7 weeks, and you can see the relative strength pulling back. Look what happened over here. Set a high, we consolidated back, started to move into earnings. But look at the relative strength. See how the relative strength was moving lower? That was not a great signal that the stock was not going to report good earnings, in my view. You got a company that made a huge move. It went from 13 to 25 in 3 weeks, 2 weeks, 2.5 weeks. A company that moves up that fast needs to consolidate. Then it moved from 17.5 to 37.5 in 6 weeks, more than double. It's consolidating, but it is starting to make another move. I have EverQuote reporting. It looks like February 24th, so it's about a month from now. That seems like it's late, though. Looks like early August, early November. Might want to double check that earnings report as well, the date of that. But EverQuote, I think, looks very strong. Next up, again, in the internet space. I'm focusing on these internet stocks because internet is on fire right now, and I think we're going to have some blowout reports. There are others I could give you. I'll give you a couple of honorable mentions in the internet space as well, but I really like NetEase. NetEase, I remember talking about this one when it came up here and was able to break out above these prior highs, went back to the 20, broke out again, and we have now really hit our stride here with the stock. Internet stocks going up. Look at the relative strength continuing to rise. It's pulled back here just recently as it's consolidated. So internet's continued moving higher. NetEase is consolidating, pulling back a little bit, but this stock looks really strong heading into earnings. So some other internet stocks. These are not part of my 15, but I'll just pull them up and show you. LLNW. This is Limelight Networks, another one that's showing tremendous relative strength. Look at the relative strength here, breaking out to a 52-week high on this breakout. We're probably going to consolidate. I don't have an earnings date on this one because it wasn't one of the top 15. I didn't look it up. But this is a company back, 460, 475, something like that would be pretty enticing. Another one in this space, CCOI. This is Cogent Communications. Moves up here, comes back down, holds support, breaks out again. It's been running. Another one on a relative basis. Just moved to test probably about a 7-month relative high. Stock looks really strong. Snap. This one could have been on the list as well. Look at this rally. Look at the volume coming in. Look at the relative strength turning back up. Snap looks like it's going to have a big report. And then, of course, Google. You've probably heard of that company before. Look at the move that Google has made since breaking out above the top here at 1,300. It's been almost straight up, a melt up on Google. Of course, a melt up in the internet and Google turning higher on a relative basis. When it broke out here, it was at a 52-week high. It's not at a 52-week high, but I think it's still overall in an uptrend. And so that still makes me feel pretty good about Google. I think they'll have a nice report coming up. All right, let's move over to, let's go with SPGI. So this is part of the top 15. Back to the top 15 again. S&P Global. It's a stock that I've liked for a long time. Again, this is one that made a big move, pulled back here the last couple of days, so we're seeing relative strength pull back a bit. But overall, another breakout here, trending higher. Overall trend, huge relative outperformance, and then just sideways consolidation. So it's going along with the group, and the group is on fire. So going along with the group is not such a bad thing, but I think we'll have a big report here on SPGI. Copart, CPRT. This is in the transportation services. So remember, talked about transportation services. I'm a little skeptical about the group, and I'll show you why here. So here's your breakout on transportation services. So that's good. Multiple tops here around 240. We broke out. CPRT just recently, when it got up here, was at a 52-week relative high to transportation services. So it's a really good-looking stock within the group, outperforming the S&P. Transportation services have been moving higher, but when we look at when we had that long-term weekly chart, it was just starting to break out above the 20-week moving average. I think the PPO, weekly PPO, had just turned positive. So things are definitely looking better, and CPRT is one of the best performers within the group. So if this stock doesn't come out with a good report, then the whole group could be doomed. But CPRT set to report 219. By the way, NetEase also 219 and SPGI 25, February 5th. Next one up, AAXN. This is a company in the defense group. Huge move up here. Look at the relative strength. All of a sudden just explode to the upside. Now the relative strength's been going down, but we've been consolidating. So I think we're going to get a breakout here. I would watch the trading range between about 77 upside and about 68 to the downside. I think we're okay as long as we trade in that range. Watch for the breakout, though. If we get that breakout, volume comes in. Let's see if we get another surge in relative strength. AAXN, I don't, again, have the exact date. I was looking actually right before we started this, so I didn't have a chance to look at any backups, but they should report somewhere maybe toward the end of the first week of February. Also in the defense group, Huntington Ingalls Industries. Look at the move here. Big volume, another push here, big volume. I see a lot of relative strength, 52-week high on the last volume surge. This one looks good. Defense is broken out, and this is one of the better performers. I expect a big report here. They report February 12th. DXCM, Dexcom, huge move up back in November, pulled back, and now just recently broke out again. When we did break out this one, now remember, medical supplies, if we go down here, medical supplies has not been a great area of the market. But DXCM has been a huge outperformer of not only its medical supplies peers, but also the S&P 500. So it has been a really strong performer, huge volume with this gap up and earnings back in November. They will be coming out with their earnings on February 19th as well. So they'll be joining Copart and NetEase on the 19th of February. But yeah, the relative strength here looks good. I think pullback, probably not a bad time to think about jumping in on DXCM. Teladoc, this one did not show me any earnings, but I do think that they report at the end of January. I think this was the earnings report right here at the end of October. So this one probably reports next week. But when we're talking about software, there's your software move. Here's software relative to the S&P, and look at Teladoc relative to software. So you have one of the best stocks in one of the best industry groups with tremendous volume trends. I would suspect they're going to have a big report. Now here's one that's been pulling back. I'm still a fan. Digital Turbine. This one is in our aggressive portfolio, I believe. APPS. Look at the relative strength right here back at the end of November. That's when the stock broke out. Volume trends right here coming off of its earnings report. Everything looked good. And then we went through a period of consolidation. I would love to see this thing get a confirmed close back up above the 50-day and break this downtrend line. But I think we could have a pre-earnings run beginning pretty soon on APPS. This is one maybe to watch. Again, relative strength has been declining since we have been in this little consolidation mode. I think we're going to turn back up again, though. So watch for the absolute movement to the upside and breakout above the 50-day, and then also for a return to relative strength here. They should be reporting early in February, first week of February. Another software stock, Shopify. I mean, this thing is just on fire again. A lot of selling took place back in September when the overall group struggled here in the summer, August and September. Many of the software stocks, it wasn't just Shopify, many of the software stocks were moving lower. And if you recall, if you're a member of Earnings Beats, I could go back and point out times I said, watch 280 on Shopify. That was this breakout, the pullback here. Notice when we went back down, we went to about that 280 area. There's your reversing candle, nice bullish engulfing candle, nice bullish engulfing candle there. Both of them reversed. This one was a major reversal. And now Shopify looks to be set to have a blowout earnings report. They report February 10th. All right, moving on, CATM. This is the 14th stock. This is in the financial administration area. So financial administration stocks, I think, look pretty good. CATM reports the 29th, which is a week from tomorrow. And when we look at it, you can see on this breakout, these last couple of breakouts, relative strength, new highs. Didn't quite hit it on this push to the upside, so maybe we'll see a little bit more consolidation, but still very, very strong. This has been one of the best stocks in financial administration for the past 5 or 6 months. Much better than PayPal or Square or some of those other names. Cardtronics looks pretty good, but it is a smaller company. And again, I think they report next week. A company that doesn't report for a little over a month, and this is in the publishers group. I talked about publishers earlier. This is TGNA. So publishers have broken out. TGNA now, with this latest push right here, on a relative basis, has just moved up to about a 7 or 8 month relative high to the publishers group. So you got the publishers on fire, and this is a stock that now is also among the leaders. Nice volume trends coming in. I suspect after this long base that we are just now beginning to start a nice uptrend, and I expect good solid earnings. Again, we're still over a month away from their earnings, but those are 15 companies that right now, based on what I'm seeing, are suggesting big earnings reports ahead. Again, whether or not we get the positive reaction, that's hard to tell, but those are the 15, and I've got them noted here. I'll have to come up and make a chart list because I don't have a chart list just yet. So I'm just making a note to myself here. But I do want to go over some companies that will be reporting next week and some stocks that I think could have some good positive reactions to earnings, or at least have solid earnings. First one's Brown & Brown. Beautiful move up, and I'm just going to go through these quickly. Look at the relative strength. Very, very strong performer among its peers. Apple, again, how could you not see a big report from Apple? A company doesn't do this. Wall Street doesn't accumulate if they're not going to have big numbers coming out. I will be shocked if Apple missed either revenue or earnings. Not only that, but I think we're going to see a really strong we're going to see some strong guidance coming out of the company as well. UTX, United Technologies, aerospace, not very strong, especially with what's been going on in Boeing. But look at UTX relative to aerospace. You got a leader here. Volume coming in still, moving up. These companies, by the way, BRO reports January 27th, which is next Monday. The companies I'm going over right now, Apple, UTX, January 28th. And I'll give you some more on the 28th and then some on the 29th, and we'll wrap this up. LMT, Lockheed Martin breaking out after sideways consolidating. Look at the relative strength. Relative strength wasn't bad here at the high. We sideways consolidated. Actually, defense stock sideways consolidated. So we saw a little bit of weakness in relative strength, but now we are picking back up again. The group is broken out, and LMT is showing relative strength. I expect a good report here. Advanced Micro Devices, kind of like Apple. There's no way they're not going to have a big report. Stock went from 27.5 in October to now over $50. It is part of a very strong semiconductor group, and it's one of the strongest stocks within the group. PACCAR, PCAR, consolidating, but look at the relative strength here. Set a new high back at the beginning of December, right in here. So as it was setting new highs in price, it was showing relative strength. Now it's consolidating. I think that maybe watch $76 to the downside, but I think it'll consolidate. I expect we're having another good report here. Now this is going to be one that I've been calling this a sleeper. Xilinx, and it really relates back. I'm going to pull this up on a weekly basis. Actually, we can just leave it on a daily basis, but let's go back a little ways. I'm going to go back 3 years on this stock, because you have to understand that while the stock has been a really weak performer, it was a weak performer throughout the last 3 quarters of 2019. Semis kept going up, and on a relative basis, this stock was falling. Look at how it outperformed, though, in about the 8 or 9 months prior to that. Huge move up. I think this stock needed a time to kind of settle down. What I am seeing is lower highs and also lower lows squeezing into a bull wedge. And I actually think that this is a time where we could get a breakout. I'd watch the earnings on Xilinx. This is one that if they come out with good earnings, you may see a renewal of that uptrend. It may have already started right here, but definitely if earnings are strong and we get a gap up, I would expect Xilinx to have a really strong next quarter or two. PHM, let's go back here. This is Pulte. Let's try this again. There we go. On a relative chart here, Pulte's just broken out. Look at the volume. The home builders have now broken out. Rates are still incredibly low. This is a great environment for home builders. And Pulte's been one of the leaders, near 52-week high, actually hit it earlier this month. And now as we move higher, we've pulled back a little bit, but overall, it's mostly because the group has been so strong. Pulte remains a very strong company. Moving on now to January 29th, which is next Wednesday's earnings. And this will be the last day. Remember, we'll be doing an earnings preview next Monday night, so I didn't want to keep going out too far on these. But let's just take a look at Wednesdays, some of key earnings reports on Wednesdays that look good, that next Wednesday that look good to me. Microsoft is one big move up. Software moving up. Microsoft just recently at a 52-week high relative to the group. Hard to argue there. Alibaba, this one could really come in with a big number. Look at the huge move. It's in the broadline retail group, which is not broken out yet. And yet, look at where the group is versus back in July, and look at where Alibaba is versus back in July. And what that has translated into is massive relative strength. So Alibaba, big volume. I think there's accumulation taking place. This is one maybe with earnings. I think they're going to have good earnings. Maybe we get an opportunity on a pullback. And I get that question sometimes with the strong earnings chart list. How come I include a stock if it's a negative response to its earnings? Well, if I see this kind of a move prior to an earnings report and Baba comes out, beats top and bottom line, and pulls back to the 50-day moving average, I'm still going to like the stock. They beat top and bottom line, and now it's pulling back into an area of, much bigger, more significant support. That's what I want. I'd love to see Alibaba have a great report and pull back. So sometimes if you see that on the strong earnings chart list, a company that maybe looks like it's had a bad reaction to earnings, a lot of times I actually prefer that. I like to see a company go up based on rumor, sell off based on fact, and give us an opportunity to get in cheaper. MasterCard MA, another breakout here. This one broke out in December, has continued, and has even accelerated to the upside. Look at the relative strength here. Huge move up on MasterCard on not only an absolute basis, but also relative basis. So I'm looking for big reports here. As of a few months ago, probably never would have thought I'd been talking about GE, but I tell you, things have changed here with General Electric. And huge move up, lots of volume end of October, early November with their last earnings report. Another breakout here to start the year. We're pulling back a little bit, but look at the relative strength. Early January, 52-week high relative to its peers. GE looks pretty strong heading into earnings. Tesla, I already mentioned, they do report next Wednesday, so just want to point that out one more time. NSC, this is Norfolk Southern, did just break out above these prior highs. Railroads have broken out. See this? Sideways consolidation for a while. This is looking really good for transports in 2020. We're seeing railroads break out. Saw a big move in the truckers before they pulled back last week. I think transports are starting to look good, and that bodes well for the overall market if you're somebody that follows the Dow theory. But anyway, Norfolk Southern, look at the move here, volume picking up. I'm seeing relative strength. It just moved to about a 6-month relative high. Nice move here. I suspect we're going to have pretty decent report on NSC. Lam Research, another one. They just had one of the best reports of the last earnings season. And you can see the 3 white soldiers if you're a candlestick fan. Big move to the upside. Came back down, hit the 50, got close to gap support, took off again. Semis have been strong, and you can see Lam Research continues in this long-term uptrend on a relative basis. I think it looks good. Last few stocks here. RCL, this is Royal Caribbean Cruises. Beautiful move up here. Look at the relative strength here. Even when it was just consolidating here, do you see how the recreational services group went down to a new low here? And look at RCL holding on to its prior support. That's a good sign, and that's what started this relative strength. And now look at all the volume that's been coming in as it's been moving up, moving up. I think we're going to have a big report on RCL. Stanley Black & Decker SWK has been trending higher. Volume trends good. Look at the relative strength in December, 52-week high right here. And then when we sideways consolidated, that's when we go down on a relative basis. And now we're starting to turn back up again and again. As I mentioned, nice volume. Last one I have here is AMP. This is in the investment services area, which I talked about. It's been improving, although we could see like to see a little bit more strength, relative strength there. But check out the group on an absolute basis. It's been doing fine. And then right here, we were challenging a 52-week high on AMP in December, and then just started pulling back as we were consolidating. I think AMP looks good. All right, I did it all in an hour, John. We got through the 15 stocks. We got through all of the reports. I don't know, 15 or so next week I wanted to do, and
Awesome.
went through all the industry groups. And again, that chart list is shared with anybody who's an annual member at Earnings Beats.
Okay, I'm going to make sure everybody knows you'll get a copy of this, by tomorrow, probably in the morning. Go to the website, right? Webinar special. Save a lot of money over the course of the year supporting us in the process. And next week we'll have a great event. Tom, great job tonight.
Yeah, it was fun. I always like these events. I'm glad everybody could make it. I really appreciate you being here with us. And if you're not already a member at Earnings Beats, hopefully you'll give us a shot.
All right, take care.